What's up, crypto fam? Historic market rebound just hit as Trump pauses tariffs. We saw the second largest Nasdaq gain in history, 12% in a single day. Bitcoin surged past $82K, Ethereum rebounded 15% from two-year lows, and get this, Fartcoin exploded 43%. But is this relief rally sustainable or just a temporary reprieve? Let's dive in. Hey everyone, Alex here from Moonward Capital with your Crypto Pulse Flash update. If you're new here, we deliver 6-minute market intelligence twice daily to keep you ahead of the crowd. Today, we're breaking down this massive market reversal and what it means for your portfolio. Let's go. Crypto markets just staged a dramatic recovery after President Trump announced a 90-day pause on tariffs for 75 countries. This triggered the second largest single-day gain in Nasdaq history at 12%. The relief rally has restored over $200 billion to the crypto market cap in just 24 hours. Looking at the top assets, Bitcoin surged to $82,228, up 8.62%. Ethereum rebounded to $1,632, up a massive 14.84%. Solana jumped to $116.98, up 12.84%. And XRP hit $2.01, up 13.33%. The sector-wide bounce shows L1 chains up 4.73%, NFTs gaining 5.15%, and low-float assets leading with 5.74%. Bitcoin dominance sits at 43.8%, while the overall market cap has recovered to $2.51 trillion. So what exactly happened here? President Trump announced a 90-day pause on reciprocal tariffs, reducing them to 10% for most countries, while negotiations continue. This unexpected policy reversal triggered a massive short squeeze across all markets. We saw over $5.5 billion in crypto short liquidations, mostly affecting traders betting against the market. Funding rates have turned positive again, with Bitcoin at plus 0.002843 and Ethereum at plus 0.004775, indicating bullish sentiment returning. The market sentiment index still sits at 32.98, in fear territory, but that's a significant improvement from the extreme fear readings we saw just 48 hours ago. The ETH-BTC ratio has recovered to 0.0198, though it's still near multi-year lows. Beyond the tariff news, several other important developments are shaping the market. First, Paul Atkins was confirmed as SEC chair by a 52-44 Senate vote. He's pledged to make digital asset regulatory framework a top priority, which could signal a more crypto-friendly approach from the SEC. In the Memecoin space, Fartcoin has emerged as one of the market's top performers, surging 43% to 73 cents, with over $492 million in trading volume. Now ranked hash 102, with a $738 million market cap, Fartcoin's meteoric rise highlights renewed appetite for risk assets. Meanwhile, Hyperliquid, HYPE, jumped 16% to $13.80, reaching a $4.6 billion market cap. The decentralized derivatives platform has seen trading volume exceed $250 million in the last 24 hours as traders rush to capitalize on extreme market volatility. Looking at the technicals, Bitcoin has formed a strong V-shaped recovery with support at $80,000 and resistance at $84,000. Volume profile shows massive buying, about 3.5 times the average, which supports the bullish case. Ethereum's bounce from two-year lows shows strong momentum, but it still needs to reclaim $1,700 to confirm a sustainable recovery. The ETH-BTC ratio is recovering but remains historically depressed. Solana found strong support at $100 with resistance around $121. Breaking that level could trigger significant upside. On-chain metrics show transaction volume surging to 3,000 plus TPS, indicating healthy network activity. The derivatives market is also signaling a significant shift, with aggregate open interest at $42.94 billion and funding rates turning positive across most exchanges. This suggests traders are positioning for continued upside. Several key events could impact the market in the coming days. Tomorrow at 12:30 UTC, we have the U.S. CPI data release, which could shift Fed policy expectations. The SEC is holding a crypto roundtable tomorrow, the first under new leadership. Ethereum's Pectra upgrade is scheduled for May 7th. bringing account abstraction and increased staking limits. And most importantly, the 90-day tariff deadline on July 8th looms as a potential volatility trigger. Bond market stability will also be crucial. Any return to yields above 4.5% on the 10-year Treasury could signal renewed market stress. So what's the play here? This 90-day window provides an opportunity to strategically reposition, but remember that tariff negotiations could still fail, potentially triggering another market shock when the deadline approaches. If you're a trader, beware of potential bull traps and consider taking partial profits on leveraged positions after this massive short squeeze. For investors, use this strength to rebalance portfolios, perhaps taking some profits in outperforming assets like Memecoins while maintaining core exposure to Bitcoin and Ethereum. Is this the beginning of a new bull run or just a relief rally before more pain? With 90 days of reduced tariffs, are you positioning for upside or preparing for the next potential shock? Let me know your thoughts in the comments below. If you found this analysis valuable, hit that like button and subscribe for more Crypto Pulse updates. I'm Alex with Moonward Capital, keeping you ahead of the crowd. See you in the next update.